Good morning, everyone. Or maybe for some people, it's good afternoon or even good evening. So my name is Karl McDermott. I'm the Global Head of Business Development for Morpheus.Network. And I'm going to be talking about in this webinar, the opportunities arising from USMCA Free Trade Agreement in the COVID era. So this presentation has three parts. First, I'll be looking at global trade and the impact of COVID-19. Then we'll be looking at the global supply chain post-COVID-19. And finally, a roundup and a summary of the changes in USMCA, the trade agreement that replaced that NAFTA, which started on the 1st of July. So first we need to discuss really what's happened in global exports in the last 30 years or so. They've also quadrupled to $25 trillion in that 25-year period, grown to 25 trillion in 25 years. You can see obviously here the impact of the financial crisis in 2008, 2009. Obviously the trade wars, specifically China, US, in 2018-19, and then we really don't know where COVID's going to end and the effect it has on global trade. We only know it's going to go down. And part of that growth of global trade then is really being powered by what we call the free trade agreements. Some of those are full customs unions, like you have in Europe. Obviously the old NAFTA, which is really more of a trade agreement, okay? And a lot of those then agreements were actually used to implement supply chains based on the ability to move product between those regions at zero tariff. So a country like Mexico that has 14 different agreements can actually export and import, free of duties to 50 different countries. And obviously then the global supply chain was optimized to take account and take some benefits out of all those free trade agreements. So we're going to go back to school very quickly here and talk a little bit about the value chain more than the supply chain. So this is part of Michael Porter's value chain analysis. These are actually the primary activities in the value chain analysis. A, inbound logistics, B, operations, C, outbound logistics, D, marketing and sales, and then E, service. This was actually published in 1985 and really was, part of the modus operandi for people building their corporates and their corporate structures through the 80s, 90s, and noughties. If we take that a little bit further and apply then the CPOC principle, at least to the inbound operations and outbound logistics, CPOC stands for supplier, input, process, output, and then obviously customer. Again, this was very, very popular, I think, with the Six Sigma movement. You can see then how we can map CPOC to those different value chain activities, and then what's happened in the extended supply chain, specifically in the tier 1, the tier 2, and the tier 3 providers. So the tier 3 might be producing some spare parts or some parts. These will then be built into consolidated parts and into sub-assemblies and then into finished product. And this is very, very common, for example, in anything with lots of manufacturing like the automotive industry, where the OEM is there to coordinate the supply chain. So this philosophy or this implementation of the supply chain then took account of those free trade agreements that we saw on this slide around specifically some of the tier 3 and tier 2 providers, and then allowed then the OEMs to ask their T1s to do the sub-assemblies. Now a lot of that was then really around that just-in-time philosophy, the what's of what we're producing, inventory, how much inventory, and then when that product was going to arrive, the estimated time of arrival. And obviously those metrics were then passed up and down the chain, from the tier 3s to the tier 2s to tier 1, tier 1s to, let's say, the OEM, as a coordinated supply chain. And that really worked well when you had predictable demand. But we know what happened next, right? So we saw in early February that global OEMs had to like park or stop some of their production lines because some of the small component manufacturers in China and South Korea stopped producing them. And obviously that had a knock-on effect in tier 2, and then a bigger effect in tier 1, and then many of the global OEMs actually had to stop production. And we know that part of that reason. Now, we know what happened next. Basically, when your whole supply chain, global supply chain, was developed around having those very just-in-time kind of philosophies of moving product very, very quickly through the supply chain, and then suddenly one of those parts stops, then you have, the house of cards, collapsing, and where we are really now in the COVID world is, how do we really reconstruct some of our supply chains around the 3 R's? Reliability, resilience, and risk. Okay, so if you ask Henry Ford what to do about supply chains, in that area you might have said faster supply chains, or if you're a global purchase manager, you might even said cheaper supply chains. So how do we see the supply chains changing? Well, really, we don't see tier 3, tier 2, tier 1 going away, but what we really need then is a cloud middleware that will help coordinate those activities, coordinate the inventory and stock levels and the estimated time of arrivals between all those stakeholders to make the supply chain a lot more agile and a lot more flexible. And we think some cloud middleware can help in doing that. And specifically cloud middleware running on DLTs like blockchain that uses IoT sensors, and obviously machine learning and AI then to optimize some of that predictive analytics around inventory and ATI. But that won't work on its own. The second key component you need in a supply chain post-COVID is really around collaboration. And that's a willingness to share data, but also then to actually collaborate in making those actions and those decision-making together. So effective collaboration really requires standards. And we've seen this many, many times in some of these disruptive technologies. Here's probably at least 100-year-old picture from Texas where they had like the standard gauge, the 3-foot gauge, and also a narrow gauge running within the same territory. So what we're trying to do here then is to have a common standard that will allow us to collaborate around those key metrics and those key indicators. And here's some of the current standards that we've seen, specifically from the business side and also the technology side. So, the WO Council, this is really around like World Customs Organization. They've provided a SAFE framework, standards for security and facilitating global trade. GS1, you might know this company from barcodes. This is the company that actually invented the barcode in commerce. They provide a global harmonized framework to manage supply chain and cross-border compatibility. Okay, and then on the business, everyone's been using EDI for many, many years, but then there are other technologies that we use maybe inside an organization, like business process execution language, which also could be used for supply chain activities using an orchestration engine and various web services. We actually believe that the next generation of standards and technologies are around middleware and around blockchain and smart contracts. Specifically, how you might use the information in a smart contracts, let's say a reorder event based on IT. So let's say there's a temporary exception and you have to reorder that product, or a insurance event around a product that like a perishable that went bad and you'd need to find out the root cause, or even the good old letter of credit from the bank. How we might then provide data to a letter of credit on blockchain to make sure that the conditions of that smart contract were always up to date and that payments could actually be made. And here's a little bit about about our blockchain and about our platform and the different integrations that we have as a middleware platform in order to make that happen. Obviously from IoT, machine learning, AI, connectivity to the banks, as well as documents, shipping or shipment information, QR codes that can go from assets loads all the way down to items, and then RFID and all running on distributed ledger technology. So the second section of this presentation then addresses the global supply chains post-COVID. If we know the old model of like just passing information up and down the train is broken, and we also know that we need to make our supply chains more resilient, less risk, more reliable, what can we do about it? So in the discussions that we've had with many of our customers in the last 3 or 4 months, it's really about those 3 R's, the resilience, risk, and reliability. It's no longer now the paradigm of lowest cost. And that's important when you're looking at a typical global supply chain that moves through multiple countries, and when you have like an exporter on one side, an importer of record on the other, and lots of different stakeholders, which could be those tier 1, tier 2 providers, and also the logistics or the supply chain companies specializing in different modes of transport, the ports, and obviously the customs brokers and regulatory authorities. They all have different platforms. They all have different processes and methods and communications. So if we're looking at an accelerated digitization of supply chains, that's one of the key themes. We're also seeing a move towards trusted suppliers and providers, specifically around shared documents, data, and events. And finally, that area, that issue of collaboration. And we're seeing like a lot of interest now around the focus of like a shared group of metrics, specifically the key ones around real-time inventory and ETAs. So what are we seeing in acceleration and digitization of supply chains? Well, the coronavirus has really revealed the fragility of a modern supply chain. Everyone talks about disaster recovery. I think most boards actually, expect there's a disaster recovery plan, but many people really weren't prepared for a black swan event like the COVID virus. And a lot of that then is to de-risk those weakest links. Where's the biggest impact? Where's the biggest risk? And let's go and de-risk those. And that might even then relocate part of your operation to a separate country or separate suppliers within that supply chain. We think there's going to be a big change towards like local or regional. So if you go back to those trading blocks, maybe the global world commerce might drop down, but then the regional or the trading blocks or the customs unions will take up some of that slack. And we've seen some of that already implemented in the new NAFTA, USMCA, around the car industry and local content. Okay, obviously we can't take down those, those customer expectations. I think they're still very present. Obviously for the last 3 or 4 months, the priorities is getting products moving. But like the global trends of sustainability around climate change and working conditions aren't going away. And you're going to have to ensure that your supply chain partners are all signing up to whatever sustainability charter you're implementing. And finally, we see a huge opportunity to eliminate those manual documents and repurpose tools like email. If Zoom and Teams has been the modus operandi now for communicating within a company, I'm sure we can start repurposing and re-implementing and changing some of those core technologies like email, like manual documents, and then adopt like modern versions. And we saw this actually in several customers pre-COVID. Customers that are trying to eliminate the overhead of manual documents and maybe thousands of emails are already on this digital supply chain journey. Okay, so let's just go back. So the second issue in supply chains post-COVID is to find then trusted suppliers and providers. And that's really around shared documents, events, and data. So I guess this is a question for the audience. You can actually use the chat box at any point in time to raise questions, which we'll take at the end. But which of your organizations had to hire a new 3PL to move products within that new period, maybe even take on a new supplier or a digital broker? How did that onboarding process go? How did you integrate the documents or share data? How did the event handling go? So really then there's like a big push now to automate some of those basic tasks. Okay, so we provide a solution then that allows companies to automate some of those basic tasks, including document management, curation, adding data such as IoT and QR scans, and event handling to one common repository, which then can be shared across all your different actors and stakeholders in the supply chain. And that was implemented in companies like Federated. This is one of Canada's biggest retail organizations, a company that turns over $8 billion. Pre-COVID, they'd already needed to implement a solution to manage documentation around regulatory certification for 150 global suppliers to implement the Safe Food for Canada Act. So we were actually able to implement this solution in 45 days and get them actually compliant with that act, and also give some advantage to the suppliers who now can upload their information digitally, receive notifications, understand better the process, and have a lot more transparency. Our third then focus is around what we call the shared supply chain metrics. And we talk a lot about ETA, the estimated time of arrival. This is often captured maybe at the beginning of a supply chain, maybe it's even on the purchase order, it's part of the delivery terms, but really then it's not detailed enough to really help you manage your business, particularly when those supply chains haven't really performed to the ability that we expected in the SLA. Okay, and part of that is because it's a fairly old metric. It's based just on empirical maybe history, and hasn't taken any account of any of the other kind of drivers that you might use in creating a more reliable ETA. We can use football or soccer as a simple example here. Soccer is a simple game. It's usually played between two sides of 11 players, and whoever scores the most goals wins. In the World Cup, that's usually Germany. But in the last 10 years, they've developed new metrics like expected goals, which then, based on big data, will allow you to create a new metric around how many expected goals a striker would score. So, Robert Lewandowski at Bayern is obviously, the highest goal scorer or second highest goal scorer and the highest expected goals metric. And we expect then something similar to that in global supply chains. So, expected time of arrival should take into account your IoT data, should take into account the handling information, when those documents are uploaded, when those key events pass, to give you a much more reliable ETA. And we've seen that now in maybe some of the car parts, some of the car industry, the OEMs, where you've got plants idling since February or low plant utilization. We can use XDA then to align production plans, create a more reliable time of analysis versus the estimated, and then provide end-to-end traceability. On inventory, if we look at a case for US food exports, it's very typical in SAP, very cash conscious, their working capital, they love to try and conserve that, and they only usually have 27 days to remain solvent. That's why in many countries they've had to do some bailout plans to keep some of those SMEs from going under. Now again, with real-time inventory for the supply chain, we can help conserve some of that cash, give them a clear pathway to improving working capital by using real-time inventory and obviously an ePod and blockchain to convert that inventory into cash. So here's a couple of examples of maybe some of the new metrics. And this is how we might look then at E2E or end-to-end cycle time with delivery dates. Time in process on one scale, dates on another, document uploads or activity, and then at the top, the comparisons with the real, the estimate or expected, and then finally, what was your original ETA? And we think this will actually help companies a lot in navigate, what we might see as some rough seas over the next 12 months while the economies recover. So I'm finally going to talk a little bit about USMCA and cross-border trade and some of the specific changes in USMCA and compared to the old NAFTA. So USMCA is the actual replacement for NAFTA. NAFTA was a trade agreement that was signed between the US, Canada, and Mexico, went into force on the 1st of January 1994. And then global trade between those partners has grown from $300 billion to $1.2 trillion in that period. and it's been highly beneficial for all of the partners. This is the view of Mexico, so I apologize here for the Spanish class. So you can see that Mexico's exports to the US grew to 131%, and to Canada 808%. And those patterns are obviously then very similar in Canada and the US. Okay, this is then Laredo's, the border crossing. This is actually the biggest land entry in USMCA, and it's actually the biggest port in the world by volume of cargo. And you'll see the effects of NAFTA, or the old NAFTA, and then the new USMCA. If you travel anywhere, around the Mexico region, for example, across the border into the US, the traffic for trucks has obviously increased at least tenfold in that period. And then the two relevant, I would say, policies, if you're importing into the US, you need to look at regarding the new USMCA rules would be about customs and border protection and the automated commercial environment. It's called ACE, it's the single window. So there is a current platform that you can actually connect digitally to in order to start the process of release, which is the import into the United States. The Department of Homeland Security, together with Customs and Border Protection, have several innovative projects around using blockchain and IoT in order to create a trusted data set that can be used for that release process. And obviously with OEA, the approved economic operators, and CTPAT, which is the US implementation of that tool, the counterterrorism certification, you can then create trusted traders and then have advanced data sets for pre-filing. Trusted traders here would be able to look at some of the key data fields they need to include. Some of the changes that we've seen in the implementation of USMCA around the NAFTA certificate of origin, that's gone away, and currently you're going to have to fill in 9 fields on Form 28 in order now to create that filing with the certificate of origin. We've also seen some of the changes around specific verticals. So I think the OEM and textile market's been fairly well documented. Local content was a big change there. Now, OEMs have to provide 75% local content, same in textiles. Maquilla's stayed the same. There's no really any changes to that. And what we're seeing around agriculture is a general trend towards the harmonization of rules for agriculture across those 3 regions. Okay, there's actually a document here that I've linked on here, which it talks around most of the changes. I think it's a great summary, and I invite you all then to look at that link, and if you want to go and to delve in more detail around any of the changes for USMCA. Now that covers the trade angle. Now security, remember we just talked about CTPAT. That really hasn't had many changes either as current of a certification. Currently 54% of all goods by value into the US is covered under a CTPAT certificate. For companies already invested with CTPAT, our platform actually works in 3 or 4 of the key areas of the 12. Obviously cybersecurity being a cloud-based solution, but also in Section 5 assets. This really is for carriers and 3PLs. Shippers must work with their transportation partners to track goods from origin to the final destination point. So what we're doing there is taking shipment data, product IDs, maybe that will conform to the GS1 standard, weights, quantities, and values, together with carrier assets like the VIN from the truck or the container ID, and IO track and trace, and it must be consistent across all prevailing platforms. So it's that one version of the truth, from your ERP, such as SAP, all the way through to your Customs and Border Protection ACE platform. So it's like providing that one version of the truth is important. And in Section 7, which is procedures, which is again more focused on carriers and 3PLs, the digital footprint brings that one version of the truth to each shipment. That will be all the data sets from shipper, carrier partners to the buyer. And then blockchain can provide that trusted and tamper-proof history. Digital documents are error-free, auditable, and have 0 possibility of forgery and falsification. And again, I've provided a link here to the Customs and Border Protection around CTPAT in order for a company then to delve more into that program. Again, for the companies already invested it, we have some technology that allows you then to use your CTPAT certificate and to optimize your supply chains, which will involve quicker clearances. And then for those who aren't invested in that program, we highly recommend it, and our platform will help you then actually achieve certification. So that's really the content I wanted to provide to you in this webinar. Please feel free to then reach out with me for any questions. If anyone would like me, I can go and show you some highlights of our platform around some of the specific topics I presented here. I'll quite happily do that now. But otherwise, please feel free to send me some questions. Since we still have some time, I'm just going to give a quick demo then of some of the key parts of our platform and to reinforce some of those issues we discussed. So now, here we have like a typical shipping contract. This is going from a company in Mexico, going to the United States. This is a premium drinks. And obviously here we list then, just as we were looking for that US Customs and Border Protection, we're listing here the product IDs, we're listing the descriptions, any weights, quantities, how that's packaged up, any relevant HS codes if it's going outside the USMCA region, and then the value. We can obviously then pull information in from ERPs like SAP, import them from CSV files as required, and then we can save that shipping contract to execute it, or then as a template for later execution. So when you save a shipping contract, it will take you into what we call the workflow builder. Now, this is a very customizable interface. It'll allow you to use some of the key integrations we have around, let's say global carriers like DHL, IoT providers, and like some of the specific modules like we have for creating the release process in the United States, and then add them to a workflow. So typically, you might start a workflow by creating a requirement for or a list of documents. So this would be typical of pre-IMEX docs. Obviously, this USMCA certificate of origin is not required. So it could be a certificate of export, maybe a sanitary document. Okay, you can request trucks or assets on the platform, assign those assets to loads, create the right documentation around the packing list. Obviously, then create your bill of lading. So this is 100% digital. This is usually the basis of sharing documentation with third parties for shipments. Obviously, we have several IoT triggers. So this would be a temperature trigger for cold chain. You can set that up to create like temperature-based events. And then obviously, this is actually a geofence arriving at the port of El Paso. This is the customs bridge in El Paso. So when my load arrives to that point and then crosses the border and customs, I'm going to get a notification that product is actually passed. Here's our release process, and then we might finalize the shipment with a proof of delivery and pick up that proof of delivery document, any relevant evidences, which could be a photo, for example, and make sure that that product is now in the distribution center. Okay, so we can then go ahead and execute that workflow. And what that does is, run a workflow middleware step by step, picking up that data. And we normally then create what we call a digital footprint, which is the end-to-end data of that shipment. So we might have here some information on the companies, certificates of origin, some of those logistics providers. We can go down to very granular level, like the truck ID as required, okay? Even the driving license, okay? We can go into any regulatory documents like ISOs or certification, hazard and control points, the CTPAT document as required. We can pick up the bill of lading. So, here would be our bill of lading for this shipment, okay? All the way down to proof of delivery. So that's the end-to-end digital footprint, which runs on blockchain. For anyone actually uploading documents, we have a special interface so that those documents and that document process can be approved. So this is that interface. It allows me to manage all those documents. So here there might be a, let's say, an import. Let's look at like a tax ID. We can go and have a look at that tax ID, make sure it's the correct document before it actually gets sent to customs, for example. So what we're doing here is to make sure that every document attached to the workflow was uploaded correctly, uploaded in a timely manner, and has been approved for pushing to our digital footprint, which then does serve as a basis for the declaration. Okay, so that was a quick demo of the platform. Again, let me know if there are any questions. We still have some time on the webinar to discuss some of the implications of cross-border trade and specifically the context of USMCA. I will stay on the line for another 2 or 3 minutes, but I would like to thank you then for your attendance. You can reach me at over LinkedIn, Karl McDermott. Send me an email, Karl@Morpheus.Network, if you have any follow-up questions. You can also look for our company on LinkedIn. Thank you much for your time today.